Hey, Tony, we're a couple minutes, okay?
No worries.
So, good morning, everybody. We might as well start the meeting. I've heard from Representative Wood, who will not be joining us today. We're gonna convene the meeting of the Insurance and Real Estate Committee, of which I am not a member. Um,
I am Kathy. I
Oh.
cross over.
Not a member. And we're gonna start talking a little bit about the insurance fund. Representative Walker, do you have any comments?
No, ma'am, and I apologize. I am home with that wonderful disease, COVID, so I apologize for not being there, but I will be here on Zoom, so let's work. Thank you.
Well, we miss you. And I apologize. I don't know the ranking members on insurance. Who is a ranking member? Senator Wong?
Yes, Senator Austin, thank you for co-chairing this. And indeed, I'm glad that the appropriation chairs are sitting in on this because obviously it's an important issue in light of what we just saw with the storm damage that occurred in Western Connecticut. These are important considerations, so I appreciate your leadership on this.
Well, thank you. I certainly extend my sympathies to Western Connecticut. The same thing happened in Eastern Connecticut last year, where we had 3 bridges go out in a tiny little town the size of about 2,000 residents, that they're still trying to recuperate from. So I don't know if anybody else is a ranking member on Representative Pavlock. Are you a ranking member on insurance?
Yes, Senator, I am the ranking House member, and I'm glad we're having this again, especially with the recent events. These are situations that we are always, varying situations dealing with insurance that we're always facing. So I am glad, and my sympathies as well, and hoping that the eastern part of the state has a quick recovery. So thank you.
You're welcome. This is about the insurance fund. Representative Walker and I have sponsored a bill in appropriations on the insurance fund. Each, sorry, I was plugging my computer in. Each year for the last, I think, 3 years, we've been talking about this issue. Because while the insurance committee deals with some of the policies, we deal with the appropriations, and we were seeing an increase in appropriations directly attributed to the insurance fund. And we wanted to make sure that, one, we could afford it moving forward. And what, if any, of these should be placed on the general fund and not on the insurance fund, which shows an increase in people's policies, and whether it's property and liability or healthcare. So this is something that we're looking at. We know that we're not going to make large scale changes, but we should be cognizant of what we're putting on people's funds. So we have two documents that are in front of us that I thought we would talk about. One was a report done by the Office of Legislative Research, and it was payments to the insurance fund. And I'll recognize that a lot of this stuff is dry. So I happen to find the numbers fascinating, but I don't think that everybody does. So we wanted to find out exactly when did we start the insurance fund up, and what do we charge off to the insurance companies and pay for under the insurance fund. And so in front of you is an overview of an historical overview of payments to the insurance fund. And then we have the budget for the insurance fund for fiscal 24. And just talking about what are the things that are being paid for out of the insurance fund and the general fund budget. So you can see it's the Office of Policy and Management, Department of Administrative Services, the Insurance Department, which we all knew, the Office of Behavioral Health Advocate, the Office of the Healthcare Advocate, the Department of Housing under Crumbling Foundations, the Department of Public Health, the Needle and Syringe Exchange Program, Children's Health Initiatives, AIDS, breast and cervical cancer detection and treatment, immunization, X-ray screening and tuberculosis, venereal disease control. The Office of Health Strategy, the Department of Mental Health and Addiction Services, the Department of Aging and Disability Services for fall prevention, and the State Comptroller non-functional change to accruals. So the insurance fund is $104 million. And, we want to make sure that we're paying attention to how those expenditures go. And I figured I'd kick it off with people asking questions relative to either of those two reports, or commenting without sort of postulizing. I don't want the political piece of it. Let's talk about the meat and potatoes of the reports, if you don't mind. So does anybody have any comments or questions about those particular reports? Yes, Ms. Alpin, followed by Representative Nuccio.
Oh, I'll defer to Representative Nuccio first.
Representative Nuccio.
Thank you. So this is the topic that I'm extremely familiar with from a regular everyday work thing. And there are things that I think that as we go through the legislation that has been passed, this has kind of become a catch-all, where we've thrown a lot of dollars when there were issues with the budget or questions about where something went. So I think really thoroughly reviewing this to see what truly belongs here and what belongs in the general fund, specifically around the legislation that was passed, I think in 2017, regarding a bunch of the testing and stuff like that. There was a budget crunch. We removed $4.5 million from the budget and threw it into the assessments. I also think we should look at the breakdown of everything that's in there, whether or not it makes sense. The reports that we got, the OLR, the second OLR report mentioned, there are actually about 7 assessments that are placed in the state of Connecticut. Some of them are premium based, some of them are per member per month based. I actually got a request at my job to fill out the information for the state of Connecticut, and I was kind of chuckling because I was like, this isn't the right information. So I changed it all and sent it back. So I'm sure the Department of Insurance was like, what the heck did she do? But to kind of show the difference between the assessments that are based off of premium, which is what would be covered by the Department of Insurance, and then the ones that are based off of membership, which covers also the ERISA world. So there's a lot to really dig in here. And I know there was some requests last year to remove property and casualty and a couple other things, but I think we really need to look at exactly what's in here, how it got here, whether or not it belongs there. Because I can tell you for certain, for 100% certain, this $101 million that is in just that the Department of Insurance appropriation assessment is directly passed on to insurance policies. This is a direct indicator of cost of care. All of these assessments are passed on legally. They are allowed to be passed on because if you weren't doing business in that state, you wouldn't have those assessments. So I think this is a good opportunity for us to really kind of review it, look at it, see if this is really where it fits or if it belongs back in the general budget. So thank you.
Susan?
Thank you. I'm sitting here today as the Executive Director of the Connecticut Association of Health Plans. So that's Aetna, Anthem, Cigna, Connecticut, United. Did I forget anybody? Anthem, Cigna, Connecticut, United. Yeah, I got them all. I just want to echo Representative Nuccio's comments that this is just really part of a much bigger picture for the health insurers. There are a number of other assessments that are also built on to the policies that consumers purchase to fund the health insurance exchange, to fund different insurance mechanisms out there. Each one of them is laudable, when you look at it on its own. I'm sure it's hard to, make these concerns known when you're, looking at breast cancer screening, things like that. But they're piling up and we see that. And you're seeing that in the premiums, and it's become a divisive issue among the insurance companies, between the property casualty and the health insurers. Not that we're not, friendly all the time, but of course, when it's coming to money and who's paying for what, that always raises issues. I'd like to start the commentary, and I'm not sure if it was talked about last time. I want to pull out one particular line item, and it's a very large line item, from this conversation. And if we were going to have a conversation about it, it really needs to be held in a different context, and that's immunization services. It's about $35 million. It does go up and down each year. That is something the industry, the health insurance industry alone pays. The property casualty folks are not assessed for that. And it is broad in nature across, we call them, for lack of a better term, all belly buttons in Connecticut. And it is used to purchase vaccines through the state. We agreed to that many years ago. It is a matter of policy. Not every state does it that way, but we are not here to suggest that that piece needs to be changed. And that's a big number in this this chart. Again, if we wanted to look at that separate and aside of whether there's different ways to do that, that's possible, but it's a tangible good that the carriers are purchasing. They're purchasing the actual vaccines. And along the way, we were able to get legislation that assured we weren't getting double billed for the same services. So, I think it bears, pulling that out. We can have a different discussion about whether what's being purchased is correct, what what it looks like when you look backwards. I'm trying to think of the word, reconciliation looks like, those kinds of things. But I do think it's separate from the conversation we're having today. The conversation we're having today really, I think, is more focused on the additional agencies, again, outside the Department of Insurance. I think we all agree that the Department of Insurance has been funded in this manner. I don't think anybody is questioning how the Department of Insurance is funded. I think it's more to the point of what Representative Nuccio mentioned, and how it's become kind of a funding entity for other programs and services that are worthwhile in the state, but weren't able to be funded or weren't funded through the general fund at any given time. And I think one other thing that would be really helpful as we continue these discussions is to have a year-over-year spreadsheet that shows the increase of some of these funds over the years, because I can remember when some of them started, and they started as relatively nominal amounts, but have grown significantly, over time, whether that's, OHS or the Office of Healthcare Advocate or some of those other groups. The other thing is I looked at the OLR report that would really be helpful to have spelled out, because I don't know the answer anymore about what is included in children's health initiatives under the public health fee. At one point, I can tell you that it was, it's a number of different kind of catch-all programs. At one point, it was funding for local health departments for lead poisoning prevention and control. It was some funding that went to Yale New Haven and St. Francis for child sexual abuse clinics. It was case management to pregnant and parenting women that were funded through Waterbury Department of Health Department. They were asthma programs and easy breathing programs that were funded elsewhere. So I don't know to date if those are still the programs under the Children's Health Initiatives or whether there's something different. Again, all laudable in nature, but should they be funded on through a public health fee assessment on insurance carriers? So with that, I'll turn off the mic. Thank you.
Anybody else?
Thank you, Senator Austin. I'm Eric George, the president of the Insurance Association of Connecticut, and here's where we're not going to be divisive with the health plans. In looking at the history of the insurance fund, Susan was spot on. The payment for the Department of Insurance is the way it should be. No one argues anything on that. That is how it's done across the country. It is where the insurance fund has gone over the last 30 plus years. Some might say that, during times of, and I think Representative Nucio is 100% right, times of budget problems and issues that they got creative. But when we look at what these programs are and what these offices are, they're for the public health and the public good. I think if we were going to be looking at this from an intellectually honest standpoint, they're for all residents of the state of Connecticut. And they should be borne over the broadest base possible. And to achieve that, they should be in the general fund. They should not be, and I'll use the word tucked away. They shouldn't be tucked away in a fund that, quite honestly, it's just inappropriate to put them in. And Susan and I have had many conversations about, the nexus between PNC and life carriers to some of the public health programs where there is none, but we understand that you want to spread it as far as possible. Well, to spread it as far as possible is to put it in general. That is how you have the greatest just evenness, equality in terms of how these are paid for. In my review of what OLR sent out last time, which is this document, where they go through and they spread out where the dollars of the insurance fund are divvied up. Obviously, the bulk goes to the Department of Insurance, as it should. We looked at it from what the percentages were, and just looking at it. So Susan's right. The life and the PNC carriers don't pay for the immunization program, but we do pay for the Office of Health Advocate, very healthcare advocate, very laudable organization, agency. We pay for the Office of Health Strategies, equally laudable. There is no connection to the PNC and life world. And that makes up, just looking at OHS, that's 24% of the general assessment. And I reviewed that against some of my members' bills, and that lines up. So nearly a quarter of the general assessment that they received, that's the general assessments, not the other assessments that are levied. A quarter of it is going to a specific agency. That agency should be funded through the general fund. I know that that is easier said than done, but the fact that we're having this conversation in this setting, I think is a positive step in that direction of really just looking at this and being honest with ourselves as to who should be funding these very important programs. So, thank you.
Thank you. And so, are there any other questions right now from people either online or in person? Yes.
Thank you, Senator. Wyatt Bosworth with CBIA Associate Counsel. So in addition to representing Eric George's clients and Susan Halpin's clients, we also represent the vast majority of small businesses in the state of Connecticut that, if self-funded, pay these assessments or pay at least one of the assessments, the health and welfare assessment, and are fully insured employers that pay all of it. So one thing, Senator, I think is worth exploring more that bothered me, I think, when I read the OLR report is at the bottom of page 2, which lists 4 agencies that are currently using insurance fund assessment revenue for a number of programs. And, I read that in conjunction with the comments sent by the insurance department back on August 1st. And would love to hear from the department about their view about whether there's statutory connection to these assessments being spent by those agencies, and if not, why? And I think that's really important to tackle. If there's no statutory, responsibility for these agencies to be spending that assessment revenue, I think it's an important area that the committee here look at.
Go ahead.
Jane Callahan from the insurance department. So to follow up on Wyatt's comments, so there were two assessments that you see in the budget that we could not find statutory support for. One was to the Department of Housing and the other was Mental Health and Addiction Services. So the crumbling foundations that's referenced for Department of Housing, we think that is there is authority for crumbling foundations, but not but we could not tie this particular allocation, to the crumbling foundation provision. And the Department of Mental Health and Addiction Services, we understand that was originally that assessment was originally put in place in connection with the Sandy Hook incident, but unclear at this point what that assessment is intended to be.
So, if I could just get into that a little bit. I noticed the 4 state agencies that receive funds, and I'm curious, I'll have to ask the Office of Fiscal Analysis whether or not these were related to when we consolidated HR, and they're consolidating that in DAS now. So that may be a portion of what that's related to. I have to look at it, but that's what I think there. And we have also done some work relative to IT where we've consolidated most, but not all of IT in DAS. And so I think that that's a component of what's going on here. So it would have been a statutory thing. It would have been a statutory thing because it was related to the movement of information technology and human resources and human services. So I think that may be what that component is for that. I'm curious about the Department of Mental Health and Addiction Services for Young Adult Services Programs to see what that's about, because Representative Walker and I have we also have the CIA fund that funds a lot of the young adult services and other things, so we might just need some clarification of what that may be associated with. And, I think that that may be true of, I'm not certain if the homeowner advocate is something that's related to a property and liability issue, why we have a homeowner advocate, maybe something that we need to find out what that's relative to. And the long-term care partnership program, I remember talking about this in a program that we were going, so I'll ask both OLR and OFA to sort of say, where did these come from? Why do we have them here? And get down into the nitty gritty of the assessment. So I'm also curious about that, just to make sure that we are correctly analyzing it to see if it is important to be part of this or not. I'd like to go back to the immunization component of things. And so that's about $35 million, give or take. And we did completely remove the assessment for this last year. Susan, is that correct? That we said we had enough immunizations on hand and didn't do that? I just want to make sure I'm recalling that correctly.
Yes, there was a reduction in the assessment for this year because there was ample enough supply to cover the vaccinations that were needed. But we do anticipate as vaccinations pick up, that number will increase again back to its kind of anticipated amount.
So 35 million would have been the normal assessment, if that could be a correct term.
Correct.
And because we had received enough vaccinations to impact all belly buttons that
Mhm.
are related to this,
Yes.
we didn't need to have more dollars associated with this. Would that be correct?
Correct, except I think, I don't want to speak for the clinical side of this because I'm not familiar with it in detail, but my understanding is because vaccination rates went down during the pandemic, that we had ample supply to cover the following year. So that's my understanding.
Thank you.
The department may know better than me, Jane. Is that accurate?
So I know that the assessment was reduced, but I don't know the details behind that. That wouldn't have been our calculation.
Who would the calculation have come from?
It's based off the tax.
You got to put your,
No, for immunization.
Oh, I'm not sure about that. I could get back to you.
okay, that would be great. If you
Okay.
guys could just let us know where it comes from, and then we can delve down into it a little bit more.
Yeah, I assume it's going to be public health, but we can find out. Yeah.
Okay,
Yeah.
great.
Just-
Representative Walker,
Oops,
oh, I'm sorry.
I was just going to say it's Department of Public Health.
Oh, okay.
Through OPM, and I think that's one of the challenging things, just generally, and I do want to correct a statement I said about my friends on the other side. I would say tension rather than divisiveness, but it bothered me that I said that, Eric, so I just wanted to correct it for the record. But I think this underscores kind of the complexity of this issue in general. I think we have 4 different agencies at least involved, right? Department of Insurance, Department of Revenue Services, Department of Public Health, and then the Office of Policy and Management. We were talking about, who funds what. I mean, long-term care is not something that the health insurers write. When we talk about the long-term care, pieces of funding under here. So that's, and Eric, I think you have some long-term care folks in your constituency. So, it really does underscore the complexity of how all of these things are coming together and then allocated across the spectrum of carriers and policyholders that are out there.
Representative Walker.
Thank you, Senator Austin, and thank you, everybody, for all your comments. I think I'm in surprisingly agreement with most of the comments being made, because I think for me, this is not my regular area of expertise or information that I've gathered. And when I looked at this, looking at the extensive amount of programming that does not really go under the radar, that we are able to understand how these expansions go, where it is just automatically assigned, I think we need to have a bigger dive on why are these expansions necessary? What are the impacts of it? What is it helping the public? Is it supporting them in the things that we think the insurance fund should be doing? And I agree with you, Senator Austin, that the Department of Mental Health and Addiction Services has been carrying young adult services for quite some time, and to see the cost of $450 to be shifted from Department of Mental Health and Addiction Services is curious to me. What was the reasoning behind it? What insurance impact does that make to the public that this fund should be transferred? I support young adult services totally, because it works with kids that are really struggling in so many areas. But the thing that bothers me is when we don't know where we can charge it, and quite honestly, when it can't go through the regular appropriations channels, it is then shifted over. And I think we need to be much more rigid about seeing these assessments. I think the other areas, like the Office of Healthcare Strategy, is the expansions that they are proposing, why are they necessary? What are the purposes that are going to help the people of Connecticut directly related to the insurance fund? And I think they need to explain and defend why they should be shifted over to the insurance fund, as opposed to allowing them to automatically be put over there. And I think that they have to have a beginning and an end. There needs to be a finite amount of time and an assessment as to how well we did and what are the impacts. Should we continue it or should we not? I also would like to get at least 10 years of budget just to understand where the growth in the insurance fund has been the most. I think there are a couple of agencies, the Public Health and Office of Healthcare Strategies, that are clearly expanding in the insurance fund arena. And I think we need to understand why. So I support many more inquiries on their budget to the agencies that are now using the funds from the insurance fund. They have to be supported, and they have to have a direct impact for the insurance payers of the state of Connecticut in order for them to, in my mind, be part of this. And it has to be accepted and evaluated. So thank you. Thank you, Madam Chair.
So, Representative Walker, just to clarify, you would like to see 10 years worth of budgets on the insurance fund, where that is going, and how has the growth happened?
And exactly. And it's got to be justified. We can't have people tapping into funds and just staying there without having a measure of what we are accomplishing, and is it an accomplishment that is making it better for the lives of the people of Connecticut? I know there's a lot of good ideas out there, but sometimes good ideas need to be thought out a little bit better with a longer range and a stronger impact. We just don't have that type of flexibility and money. Yes.
So I will ask for that, and then I'll have Allison, our clerk, ask the following agencies to come in and talk about what they're doing with the fund. So if you can ask the Office of the Behavioral Health Advocate, the Office of Healthcare Strategies, the Office of the Healthcare Advocate, the two different advocates, the Department of Public Health, and the Department of Mental Health and Addiction Services. So if we can ask for them to come, we may ask more in the future, but let's not overwhelm ourselves. Ask if they can make the next meeting to explain their expenses and what they're related to. And exactly what do they do with the funds that we're giving them out of this portion, and that'll give us an idea on what we're looking at.
Senator Austin, I didn't know that you could get overwhelmed. I just
I
thought that.
Okay, I was sitting there and I said, I am running a meeting on insurance and I have tried desperately to stay away from insurance. Like, you have no idea. I have said for a long time, I'm staying away from this. I get to the numbers and that's all I wanted to get to. And now I'm asked in my head to figure out what exactly we're talking about for insurances, and the fact that we refer to belly buttons is just something that is beyond me. So I'm like, okay. I
Amen.
can't say it. Representative Nuccio.
See, Madam Chair, that's when it's helpful for you to have a ranking member who swims in this pool a lot. So I want to agree with what Tony just said. I think it's important that we understand the progression of all of these charges that are in here. For instance, when we talk about the public health fee, I'm sorry, that was 2015, not 2017, but in 2015, it's like $8 million was cut from the budget. I think it was $8.5 million, and it was put directly in here. Well, that fund now, 9 years later, is $12.8 million, right? So that's just that one. If you look at, we were talking simply about the immunization, the $35 million that you're seeing right now for the immunization is really a faux pas, right? I have the rates going back to 2012 that we've charged for the immunization. It started in 2012, it was $10.23 per member. And just 2022 and 2023, it was $48 and $44. Right now, it's $10. And that's just because they had that backlog. So they basically just had more, they had the vaccinations already because people weren't going to the doctors, et cetera, et cetera. The vaccines were stockpiling. And per the legislation, you're not allowed to charge more than what you need, kind of a thing. So we have to use up what we have. So that $35 million for this year is it's like less than half of the cost of what it is in a regular year. You're looking at it going up. Just like the OLR report said, they're projecting it next year to be about $62 million, right? So that was my concern, is it looks like a small number right now, but you're talking about adding $45, $48 to the cost of insurance for these. And again, the immunizations is, we need to do that. That is like a public health benefit. The problem, as what Eric said, is when you're taking these ideas, these assessments, and you're concentrating them specifically only on people who have insurance, right? Medicaid isn't covered. The state doesn't pay a portion of this. It's only people who have private insurance. You're concentrating that recovery on a smaller populace, and you're increasing the pressure and the cost of that populace instead of spreading it out over all 3.6 million people in the state. So when Susan talks about belly buttons, you're paying for all of the belly buttons with a much smaller populace of people that you're making pay it, right? So that's the that's the quagmire you have to be thinking about when you're looking at all of this, is saying, do we have the right populace paying for this? And there are definitely things in here. I remember when we first started talking about this, Kathy, I was talking to both of you, and I'm like, why is OPM in here? Why is the comptroller's office in here? Why are all these pieces being put in there? And to kind of sit down and really break it down, look at all of it and say, is this the right place that it needs to be? I really look forward to that work, just because this is fun for me. This is fun stuff. Kathy, I'll help.
I'm gonna send you for a behavioral health exam right after.
I'm sorry, Representative Nuccio and Senator Austin. I also, on the immunization, I would like the inventory at least over the 5 years, because we have had highs and lows of utilization on our on the children's immunization fund and our charges. And I think we need to look at that too, because is anybody watching what's happening, because I know that we've encouraged doctors to draw down, and there is a shelf life, but I know doctors are not going to store those because those are expensive for storage if they are not using it. So we need to really see, is anybody watching to see what are the utilization for that? I'm not, and please, I don't want to get any letters. I'm not saying that we should not have it on hand when we need it. But I do know that there's a point where we have it saturated, and why are we keeping them? Are we disposing them in a way that's responsible, or are we just stockpiling more immunization each year because we have the dollar? So make people have to justify what they're spending the money on, please.
I've always felt that when I was in the army and they would send you down a phalanx of doctors that would give you shots with the gun, and they just said what they always said right before you got this phalanx of 10 people on each side, so you were getting 20 shots all the way down. I always figure I never have to get another shot because I got so many, and I think that they must last forever. I don't know if that's true. But you know, I think that we have to really pay attention to all of these things, because what do we have here in Connecticut that we need immunizations for? And immunizations are very important, and we want to make sure that everybody has access to them. But should we be paying for them out of this fund, or should we be paying for them on a broader basis out of the general fund, which covers all residents in the state? It's just it's a legitimate question that we have. And when we're looking at the costs of our insurance policies, I concern myself with what we're doing. It's been in the papers lately that there was going to be a significant increase in automobile policies, homeowner policies, healthcare policies. All of that matters, and we have to look at what we are putting off on that and recognize that those costs are going to be recuperated inside the confines of the policies themselves. And I have a question for go ahead, Eric, you have.
I just was going to thank you for making those comments, because this is an area where the legislature has direct control. When you look at why various insurance policies are going up, there are numerous reasons, and many of them, whether it's inflation, the more technology, values for used cars being retained higher, those are things that the legislature cannot grasp. We cannot work on that, but you sure can have a direct impact on what you put into the fund that we pay for, and that has a direct impact on insurance rates. And I just wanted to thank you for saying that.
So I thank you for that. And I have a couple questions for the insurance department. So there's not just healthcare insurance policies, and there's not just homeowner policies. I sit on the CIFSIC board. And so those kinds of policies are not in the mix. Are there other policies that are not within the mix of the assessments on insurance? These policies, is it just those two? Does that make sense? Is that an appropriate question?
So when you say in the mix in terms of the assessment for the insurance fund, so it's basically in general terms, it's companies that are domiciled in the state of Connecticut, and it's based on the premium that's written by those companies in Connecticut. And so the companies that are carved out are the non-domestics. And Eric and Susan, feel free to chime in on this too.
The only thing, that's right. But also I think what you're referring to with CIFSIC, that charge never goes into the insurance fund, because what it does is it puts the property and casualty insurer as a conduit to the policyholder. So it is a direct charge to the policyholder. I think
For the crumbling foundation.
correct, specifically to on CIFSIC and crumbling
Right,
foundations.
but I'm just saying broadly, we have insurance companies that are assessed broadly for funding the things out of the insurance fund. Are they only the insurance policies that are related to healthcare and property and liability? Or are they other do our automobile policies,
Sure.
are they assessed this? Are there other types of insurance that I may not know anything about? Are they also assessed for the bulk, is that spread out, not just amongst healthcare, but also property and liability in automobile?
And Susan, please let me know if you agree with what I'm about to say or disagree. It's assessed on the companies. Companies
Okay,
have various products that they offer. So let me just give an example. A company, XYZ Incorporated, is known as a property and casualty insurer for this example. They provide coverage for homeowners, they provide coverage for auto, they do other things as well. And this XYZ company also provides dental insurance, also provides vision insurance, also provides disability income, paid family medical leave type of coverage. So that company is actually in all lines that we've been talking about. They are in the P&C lines and home and auto. And they're also in the healthcare lines, because if you look at the definition, the statutory definition of what is health insurance, you'll see probably a dozen subcategories of, and they'll say it includes a major, hospital, it'll include disability income, accident only, supplemental, and it goes through and it sets all of that out. So if you, XYZ insurance company, really don't do anything in health, like a general, how we think of a health insurance, an HMO, but you offer vision or dental, well, those products are going to be, pertinent and susceptible or part of this whole process.
so if I have an insurance company that I purchase a product from that is not headquartered in Connecticut, like USAA, are they assessed these fees?
I believe the department only has the ability to assess domestic
Right.
companies.
What do they mean by
Um,
domestics? What does that mean? What does the
Jake.
term mean?
Resident, it's typically Citus, right? So they look at NAIC premiums as reported for the state of Connecticut, right? So we're talking about, again, Kathy, it's convoluted, right? Because some of these assessments are based off of premium,
Right.
and some of them are based off of, as Susan said, belly buttons, right? So they're totally different kinds of assessments. The assessments that are based off of premium, like the assessment of apportionment that we're talking about now, the Connecticut one with DOI, that's based off of any premium that is reported in the state of Connecticut. So you have to be a Citus company, which means you have a site like in Connecticut, and then you report the premium that you receive. That is then taken, they look at all of the insurance companies' premiums. You get your percentage of the total premium for the state of Connecticut against the total amount that they want to receive back. You pay your portion, your apportionment of the premium. So for some of these assessments, if it's a USAA account and they are not Citus here in the state of Connecticut, they would not pay this. They can have residents in the state of Connecticut that have that insurance policy, but it's not a Citus account. Does that make sense?
Yep.
So if I could chime in and just focusing on the insurance fund assessment. So the insurance fund assessment is paid only by companies that are formed in the state of Connecticut, so domiciled in the state of Connecticut and writing business in Connecticut. The assessment is calculated based on the premium tax paid by those insurance companies. So the premium tax is paid on all lines of business, as Eric was explaining. And so that allows us to do the calculation. So somebody like USAA, who is largely domiciled in Texas, they're going to be paying an assessment in Texas to support the insurance fund, the insurance department operations in Texas. And so, and that's true, I believe across the country, that each state has a similar mechanism, a similar insurance fund that is funded by their domestic insurers.
I can validate that. They do. Like, across the board, we see assessments for funding of Department of Insurances pretty much in every state. Also, something Eric said that is key. If you look at the whole company just being Citus here and the premium that they're paying, it's multiple lines. So if a company offers, like he said, dental and vision are considered medical, Medicaid supplement, Medicare supplement, auto, life, long-term care, any of these insurance products is counted in their premium unless specifically indicated in legislation. So some states will say, we only want your medical and your life. Some will say, we can exclude Medicaid. You don't. It's literally based on the legislation on what is included and excluded from the premium reported, based off of, again, the NAIC reports, which gather them for every state.
Susan?
Thank you. I just want to clarify as we go through these conversations, and I am guilty of doing the same, of using terms interchangeably, but the insurance fund is inclusive of all the things we've been talking about. So it's inclusive of the funding for the Department of Insurance, OHS, the immunization fund, vaccines, the Department of Public Health. All of those are within what is listed in the state budget as the insurance fund. Within the insurance fund, it is the revenue comes from 3 different assessments.
So that's true.
So if you look at the budget in front of you, from the health carrier's perspective, where only the health carriers, but it's segmented within which health carriers, fund everything under the Department of Public Health. If you look at the budget here that you have in front of you, the constituency of PNC, life, et cetera, don't fund needle exchange, children's health, AIDS, breast and cervical cancer immunization, X-ray screening, and tuberculosis or venereal disease. Those are all funded by health carriers, but there are 2 subsets of health carriers under that fund that fund different portions. The immunization services or vaccines are funded one way, and everything else is funded the other way. So what we're talking about, that the property casualty insurers and all of those, that long list of folks that we're talking about in terms of domestic carriers, those all fund the rest of the budget, the rest of the insurance fund. But when we talk about insurance fund, we kind of have to say, the general, department or agency insurance fund, or the public health insurance fund, or the immunization insurance fund, because all 3 are part of the insurance fund.
Can I just spot on. When we had our last meeting, and OLR did this report, I grouped it, and I just want to make sure that Susan, you agree with me, and Jane, you agree with me. You have the general assessment, you have the health and welfare fee, and you have the public health fee. Under the general assessment, that is levied on all Connecticut domestic insurers. For fiscal 2024, it was 56.6 million. My back of the envelope is that represents about 54% of the monies that are in the insurance fund. That's one. The health and welfare fee, as I understand it, in general, is levied on the domestic health insurers and HMOs. 2024 aggregate was 34.3 million, representing about 33% of the deposits in the fund. And then finally, the public health fee. Again, general, levied on all Connecticut domestic health insurers and HMOs. 12.8 million fiscal 24, about 12% of the deposits. That's how it broke down. And again, my back of the envelope, lawyer, English major, not a math major. So please, that's why I want to make sure that we are in agreement on on that breakdown. When I looked at what OLR put out, that's how I read it. So I just wanted to make sure that we're all talking about the same thing.
Yeah, and to chime in, I do agree with Susan's characterization. So what I was describing was the general assessment under 38A 48. And so she's absolutely right. And Eric is too. I don't know about the numbers, but absolutely right about the, how those three components.
Can we, sorry, Kathy, quick question though. There are also other assessments that are listed on the bottom of that, the prettier OLR report that we're not talking about that hit people also. You have the health reinsurance assessment that hits Connecticut residents. There's the Connecticut Small Employer Health Reinsurance Pool, which is a huge one. It's like $16 per member per month, and it only hits the small insureds. You have the health and dental market assessment, which funds the exchange. There are a total of 7 different assessments in the state of Connecticut. We're really only talking about these 3, but there are also 4 other ones between the health reinsurance, the small employer health reinsurance pool, the health and dental market. And then there's one that I would love to see us actually do, and that's the Connecticut Mandated Health Insurance Benefit Review, which is active, which is a thing UConn would review all of the mandates and see what the impact was to the cost of insurance. That can only be engaged legislatively to do that, but that's yet another assessment that's out there if we use it. So I think it would be beneficial if we got the report like that OLR said, the additional insurer assessments and all of that. If we could see a breakdown, I know this, right? Because I know this, it's my day job. But if we could get the breakdown for you guys to really understand, here are the 7 assessments, right? Here's the world of assessments in the state of Connecticut. What falls under this one? What falls under this one? Look at all of them so we can go through and, just like you said, review top to bottom. What's in here? How did it get here? Where's the money going? How, is this the right populace to have it? Because like that small employer health reinsurance pool, it's $15.37 per month for every person who has a policy that's considered a small employer, right? Our small employers are the ones that are feeling the worst impact of the cost of fully insured plans. I would love to know what's in that. I would love to understand exactly why that's there and why we're doing that. But I think, we're talking about the 3 big ones right now, but there are also these other ones that I think we really should review. And I'd be happy to give you the legislation and the name of the assessment and how often it is and what the rates have been over the last 10 years, because I track that. But I think that should come from OLR, so nobody thinks that it's biased.
So we can ask OLR for a report on that. Yes.
Just wanted to clarify, Eric, one thing. When you came up with your 3 buckets, the health and welfare fee specifically, so you had mentioned domestic health carriers and HMOs fund that. Just wanted to make the committee aware too that licensed third-party administrators and domestic insurers not subject to TPA licensure. So these are companies that administrate self-funded plans. So when employers don't buy an insurance contract or an insurance policy directly from a carrier where the insurance company is at risk, instead they self-fund their plan, similar to how the state employee plan does it and municipalities do it, which is the bulk of employer plans, right? The vast majority of employer plans are self-funded in the state and across the country. They, at least right now, are paying the health and welfare fee. I don't know the legality of doing that under ERISA. I think there's a very strong case that the state cannot compel those TPAs to pay that fee. Obviously that's a fight for another time maybe, but just wanted to make sure that it's not just fully insured business that are paying these, it's self-insured business that are paying this as well.
Wyatt, now that you say that, I'm sorry to jump
Go
in.
ahead.
Now that you say that, I remember Christine Cappiello, I think, hinting at that or saying that at the last meeting. And I have been struggling since then, how the state of Connecticut could attach to and obligate a self-funded plan, those companies under ERISA. And I have not been able to wrestle in my head how that is kosher.
I think it's a matter of public welfare.
Hey,
Right.
listen, Tammy, you're killing me.
Sorry. I thought we were free flow. Sorry.
I don't mind being free flow, but I think I had the insurance department wanted to say something, so I wanted to get them and then you. Cause you can't see the rest of us here. If you're gonna free flow, you gotta come here.
So Wyatt's right as well. So I do think it might make sense just to have put this down on paper in terms of, of the three components, which companies are subject to,
That would be very helpful.
yeah. And so, we can certainly help with that if that.
That
if
would
you'd
be
like.
very helpful.
And just to lay it all out so that to have a visual, so everyone can see it and understand, who's paying for what.
Thanks. Tammy, you're up.
So Wyatt's right. Technically, the majority of all assessments cannot be, the state cannot compel an administrative services only or a self-funded plan to comply with their state mandates. We talk about this in insurance all the time. When we pass a mandate that says you have to pay for blah, 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 it's only going against the fully insured populace because it's the only populace that we can quote unquote command, right? The self-insured populace it's not insurance. It's an employee benefit plan that the employees are paying. They're paying the claims, right? So all an insurance company does is administer the plan at that case. I think when it comes to these immunization and public health fees, this is where insurance companies look at it as it's the welfare of all of the residents, right? So if we said, we're only going to pay for the immunization on the fully insured product. First of all, that number would be astronomical because you'd be taking that $35 million this year and the $62 million next year, and you'd be applying it to basically what I think it's about 34,000 members are actually in the fully insured mode here in Connecticut. It would kill the cost of insurance, right? But because immunizations are a public health benefit, everybody that gets them, I think insurance companies just don't fight it, right? Because any ASO client, if, state employee plan is an ASO plan, they're going to get immunizations, their kids are going to get immunizations. So pay your fair share kind of a thing. But technically, legally, I don't think if a company said, no, I'm not paying this, you can't make me pay it, legally, they're correct. I just think that it's looked at as a public benefit. Everybody benefits from the immunization stuff. So everybody kind of chips in to pay it. I can tell you if that does get pulled, though, it would sink the fully insured market. Can you imagine that? $35 million over 34,000 people who have fully insured plans in the state of Connecticut. It would be catastrophic.
So I want to just remind everybody that when we were talking about employers and the cost to employers, and we all care about the cost to employers, but I also think that we have to, what I see is what we're doing here is there's a cost to the individuals themselves. They pay increased cost as a result of this. And so I think that we have to understand that that's a component of what we're looking at, that it's the employees that are paying increased costs as a result of whatever assessments we're doing. It's not just that, because I struggle with high deductible plans, and a lot of high deductible plans are in municipalities and other publicly funded organizations. And when I see someone that's paying has a $4,000 deductible or a $7,000 deductible, I think that those are too high. That means that insurance is more catastrophic than it is for regular everyday insurance or an insurance policy. So I think that if we focus on just the whole thing and say that it's employers who are not being allowed to pass on healthcare that is true healthcare, because the increased costs are putting them at a level where they have to charge more for their employees, is a way that we may want to discuss some of this. That makes sense. Wyatt?
Yeah, and just to Representative Nuccio's point, by no means am I saying that, self-funded employers should not pay that assessment. I don't think that's the debate we're having. It would be catastrophic for the fully insured market if that was shifted on those carriers and those policyholders. To my knowledge, the self-funded employers and their employees are using the vaccines, right? They're
Yeah.
benefiting from them. So they're paying for the vaccines, and then their policyholders are using the vaccines, right? So the only thing I'm bringing up is I just wanted to make sure that self-funded employers were recognized as paying towards this, when I think in the opinion of some of us around the table, they don't necessarily have to pay that. They've been willingly paying it for years because it, as Representative Nuccio said, it is a public health program that everybody benefits from.
Susan, followed by Tammy.
And again, I'm going back some years in my recollection of who pays what, and I'll defer to the insurance department when they come up with their chart. But this issue that we're talking about, again, really comes to light when you're talking about the different assessments that are under the insurance fund. Because there is a subset of self-insureds that at the time that the DPH, the non-immunization fund was shifted from the general budget over into the insurance fund, there was a subset of self-insured folks that objected, and as I understand it, do not pay for that fund. And so all of your named carriers that I represent, and that you traditionally think of as insurers, and that you traditionally think of as self-funded administrators at Anthem, Cigna, United, Connecticut, all pay that fee. But your subset of self-insureds that are run by other ASO type organizations of names you probably wouldn't recognize, they objected under the ERISA. And because the way the legislation is written, it says these carriers or their enrollees, that's where you come to your belly buttons. Enrollees was interpreted at the time to include those self-insured members, but because it doesn't track back to those other organizations, there is a subset that doesn't pay for that third assessment. So everybody, all Eric's, all mine, we pay for the department insurance fund and the agency insurance fund. Everybody in the health world theoretically pays for the immunization fund. And then under the DPH fund, only your domestic companies and their enrollees, to your point, policyholders pay for that. There is a subset that does not. And I believe that the state employee plan agreed voluntarily to pay into that as well, but legally they don't have to.
Yes.
Yes, Susan's correct. We've talked about this. And so that is how we see it today. There is a question about how the words insured and enrolled lives are used in that particular section. That's 19A-7P. So that's continues to be a question that we have to come around.
Tammy, followed by Eric.
So I think this gets us back to something Eric said in the beginning. And first off, Wyatt, I agree. I wasn't trying to call you out or anything. I was just saying, that was, they pay it. But from something that Eric kind of said in the beginning, which ties back exactly to what you were just saying, Kathy. If you think about it, this 62 million, this 12.8 million, you're taking the cost of that program for the entire state, for every single person who uses those benefits, right? And you're concentrating it down to just people who have commercial health care. They're the ones paying for it. And these are direct pass-throughs, right? There is no profit or loss to an insurance company on this, because if I don't have belly buttons in the state of Connecticut, I'm not paying this insurance. I'm not paying this assessment, right? So whatever assessments you get, they're legally allowed to recover taxes and assessments. It's a direct pass-through. It's hitting their direct premium that they're paying, or the amount that the employee benefits is paying. So we're taking a massive population and concentrating it down to just the people who have commercial insurance. So that's something you mentioned, like how is it impacting the municipalities? How is it impacting, anybody else who has insurance? That's it. They're paying for everybody else to get this benefit. So that's where it kind of starts the conversation of where does this really belong? Where should it be in the budget? Like how do we want to handle that? And I know that it's not always applicable that you have the money in the budget to pay for all of these things, but I think it's a worthy conversation to have.
Eric?
Thank you, Senator Austin. In hearing Susan and thinking about the situation with the ASOs, that's a potentially very volatile situation because it is for everybody's benefit that the ASOs continue to participate and pay. But there could come a point of time where they decide they don't want to, and just learned that a group made that decision. And then one thing that Representative Nucio said earlier, and I really liked the way she said it, was that you're talking about a benefit that applies to everybody that is being paid for by a smaller segment. And I just wanted to come back to where we were in the beginning. I think all of this lends credence to the fact that many of these programs, and we can talk about which ones, should be borne in the general fund. That is the proper location. And you necessarily fall into these problems when you put them into a fund that was never, in 1991, was never envisioned to house this. And I'm not sure how many other states even follow, our kind of molded model. I'm not sure. I've looked into this to see, do other states try and shoehorn various programs in? I think that's something that I will take on to find out. But any help from OLR would be great, because there is a component here that I just want to throw out there just for consideration. Insurers pay our obligation to the state of Connecticut in terms of taxation through the premium tax. And the premium tax is a very interesting situation because every state looks at what other states are charging. And many decades ago, it was decided that to avoid a race to the bottom, there was going to be something known as retaliatory taxation. How you as a state charge, fee, surcharge, assess your domestic insurance carriers does not just impact how the cost of doing business for them in the state of Connecticut. It has ripple effects through the retaliatory taxation system in how the cost of doing business in those other states. So I know that I think I said in the first meeting, this is going to be an onion. As we peel it back, you're going to see so many layers of the complexity here. You talked about that we need to keep in mind the individuals who bear the financial responsibility 100%. And another thing we need to bear in mind is, where does this situate Connecticut in terms of just being an attractive place to do business? There's so many different levels of consideration here, but thank you.
Why?
Thank you, Senator. One closing thing on because this is, this is fascinating. And I've been thinking of new things to go along with this, but like one thing that should scare the crap out of the legislature, excuse my language, but is, as Eric said, not just Anthem or United deciding one day not to pay the assessment, right? They have employers that use them as TPAs, right? And those employers now, especially through new federal legislation, are fiduciaries, right? For those health plans, for those policyholders. And they, under ERISA, have the duty to scrutinize health contracts, to scrutinize their PBM contracts, to make sure data is transparent, and to make sure that there aren't taxes that are being paid that they aren't necessarily supposed to be paying, right? And I'm not saying whether or not the taxes should be paid by self-employers or not. What I'm saying is all it takes is one self-funded employer to sue the state over this tax or over this health and welfare assessment, and then overnight have all that money shifted onto the fully insured market. That's not a sustainable. I mean, we're lucky that has not happened yet, right? But I think to Eric's point, I think the more I hear the debate and talk around this, like the more it just feels like this $34 million, $64 million next year should probably, at least we should examine putting that into the general fund, just because it's so reliant on self-funded employers to pay. And the legal standing for those self-funded employers to be compelled to pay it is not strong. So that's all I'll say on that.
All right, so I see that we have to get some more information. Susan?
Thank you. On the immunization fund portion of the insurance fund, the Office of Policy and Management does do a periodic reconciliation report. So I don't want to add to the list of
Reports?
invitees that you want to, but I've looked at it and it does bear explaining. So it might be worth, if there's a real focus and interest on the immunization portion of the insurance fund, I think it would make sense to have them come in and talk about that report.
Okay. We'll add them to our list. Did you hear that? Thank you. At the next meeting, okay? That would be great. So we're gonna have a number of people come next time that we can ask questions of about various pieces of this. You're gonna provide us with some information.
I will, and I'll work with Susan and Eric to make sure we're all on the same page.
And then I'll get the 10 years worth of budgets. Is there anything else that I've neglected? Eric?
And I can try and take this on, but it might be more appropriate for OLR as an unbiased organization to do this. But it's really what other states do with their insurance fund. And I've looked into this in the past. I just want to make sure that, Connecticut shouldn't be an outlier. Should not be a place where, oh, look at what they've done. I'll tell you from my very personal perspective, I don't want to give other states the idea to sort of mold their insurance fund into a ground where you can just put whatever program or agency that you want in there. And I also want to make sure that the state of Connecticut thinks about this from a competitive standpoint.
Right. All right, so Susan?
Sorry, just to add on to what Eric said. I think OLR has done at least a base analysis. I think I've seen it somewhere about how other states do their insurance fund. But again, I think it's what's in that insurance fund that is the key, right? Do they have other agencies in there in addition to the core functions of the Department of Insurance? Do they include any kind of public health programs? Do they include an immunization fund? Other states do vaccine funds. I don't know how many anymore that operate it this way, but I'm not sure whether they operate it through their insurance fund or whether it's a separate entity altogether. And if you really want to get confusing, the Department of Social Services is also involved in the vaccine fund because they do have a
We'll ask OBM to take on that
Yeah.
lead.
yeah, got it.
Not adding in another agency.
Yeah, I wasn't suggesting it. I just was
I-
hinting
I-
at it.
My head's already swimming on insurance. So is there anybody that has anything else to say? Okay, so we got some work to do. I appreciate everybody's comments and making my head spin. And I think I'm gonna have to go to college and learn some insurance world stuff. So you're testing me all.
Not college, just next door to your office.
All right, everybody. Thanks so much. Appreciate it. Senator Wong, you all set?
All set, ma'am. You're welcome on the insurance committee anytime.
No, thank you. All right. See you all soon. Thanks.